Alrighty, traders. This is Blake Morrow. You are listening to the daily Roundup webinar. Hope everybody's having a great trading session. And I just realized I didn't even close the door to my office. And I also realized that my kids are home now because they are on a small fall break. So if things get loud in here and I have to mute the button or mute the mic, you know why. But I don't even think they're awake yet. Teenagers. Anyway, let's go through the market and show you what's happening. So the S&P continues to rally, and I was just looking at the DAX as well, but the S&P is probing, pretty key resistance. This is, this is shifting. We'd have to stop like pretty much here. I mean, and this is where you have to use your better judgment when you're trading the markets. Like let's just fast forward like a few hours from today. Let's say we went up, maybe to where we are right here, but then we came down a little bit. People would view that as a double top, and they would say, okay, that held, that resistance held. If we get much higher than where we're at right now, and we do, break out, then this it says, well, the correction's over and we're now in a consolidation phase, right? So that's kind of where we're at with stocks, and you can see it's reflecting obviously in equities or in currencies. Excuse me. You have stronger commodity currencies, and by the way, it's not just. If you look at the Aussie and you go, oh, wow, the Aussies, really up against that resistance, that 78% retracement, which we are. But take a look at I'm going to take you to some commodities really quick. Take a look at copper. I mean, copper is ripping, absolutely on fire, right? Copper's moving higher. Obviously, silver and gold are pushing up against, what I consider key resistance. There's silver, here's gold right up against the trend line. You guys know that that's all, pretty big resistance here. Obviously the dollar yen continues to hold gains. It's not, it's one thing if the dollar weakens, when you're thinking about like yields, like let's go to look at bonds really quick. Okay. So you look at yields and you go, wow, okay, yields are coming down. The dollar yen should be going down. Like when the 10-year comes down like that, you should see the dollar yen correct. The fact that it's not, scary, right? Maybe it will, and maybe if we come down a little bit further, it'll finally take hold. But the dollar yen's holding up really well. As I've mentioned before, I think that the what you're seeing here in these yen pairs is a massive accumulation of yen pairs. I think people are looking at them as carry trade type of positions that they want to hold longer term. You know what this also makes me believe is that currencies don't see a prolonged correction in equities, meaning that, I mean, equities might, I take a look at the S&P and we go, well, yeah, we might correct. And let's say from here, stocks stop and we head back down. What I think what the yen pairs are basically telling us is that any correction in the S&P is not going to be long lived. If we do make it down to 4,200, 4,100, you're going to find buyers there. And I think that the yen pairs is a way of markets positioning themselves on more of a bigger scale. You could think about the stock market and go, well, stocks are vulnerable. We might see some individual stocks coming down and blah, 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 bigger correction. And, but I think that their money, the big money folks are looking at the yen pairs as, hey, stocks are not going to collapse. They might come down a little bit, but we're going to capture the carry interest anyways, as yields start to go higher over time. And so I look at these yen pairs as being pretty damn bullish. And, that's with me, also referencing, the euro yen stopping here at the 618. Great. It may pull back a little bit. We might pull back in the euro yen to, something like this, excuse me, 130.75. The guppy, rallying. Sure, we might pull back a little bit. Aussie yen, I'm hoping pulls back because I'm short some, but where's it going to pull back to? Probably not very far. We'll probably just find some consolidation down here. And then, you take like the New Zealand yen, massive breakout. Yeah, dips are now going to be bought. Canadian yen, massive move, right? Dips are going to be bought. So, like I said, unless things just spiral and come unwound in the markets, I don't think that these yen pairs have much downside. They may consolidate and they may correct a little bit, but that's what it's telling me. That doesn't mean that that's necessarily what's going to happen. It just that's the way I'm interpreting it right at this moment in time. Nick says there's a gap from September 28th on the Nasdaq at 5th September 28th. Let's go to the Qs. He's looking at the Qs. So right here, September 28th, I'm assuming that's the gap you're looking at. Yeah, I mean, it's quite possible. Shoot, it's even possible that we stop where we're at. I mean, if the Nasdaq, to me, it looks like it's a big head and shoulder top, which, thinking about like the bigger, longer term, that does make sense to me. It makes sense to me. And yeah, this level probably will come into play, Nick, somewhere around here, as that's, close to the resistance over here, because we're probably developing a big long-term head and shoulder pattern. And again, with rates going higher, it's going to weigh more on the Nasdaq stocks. So I think that is a viable type of setup. But what does that mean? Well, that means that the Nasdaq has, just say from current levels, if it does happen, I mean, we still got another percent and a half of rally left, right? So he goes on to say, we are quite close to there now. If this resistance and we do head back down in equities, do you believe the dollar has bottomed for a rally? Dollar index seems to lead the big moves the day earlier as of late. And, I think that's entirely possible. And, just so you are just to say, let's say we held let's say we held the 50% retracement. That is entirely possible as well, because this head and shoulder pattern, if that's truly what it is, which again, I'm a believer that yields are going higher. So I'm in the camp. I know that they're down right now. I get it. I think over time, near term, they're going to be moving higher over time. I know they're down today. Even though they're down today, I think that yields are going to continue to trend higher. So therefore, stocks are going to weigh. So could we have like a more of a complex head and shoulder pattern where we stop here at the 50% retracement with a, cockeyed, slanted neckline? Yeah, I mean, that's possible too, especially if the S&P stops here. So then the question was from Nick, how about the dollar index? Has it bottomed? I don't think the dollar is going much lower than this 90s, 370 to 93.50 level. I think that this is a lot of support. It's a shame that this all happened in Europe. I didn't sell any euro because I was going to try to sell euro at 116.50. And I was pointing this out in the chat room. The problem with the euro right now is and I'm going to delete this, but we're still making hourly lower highs. Right? I mean, we are. Trend lines coming into play. I mean, so do I think that the dollar is leading? I think that the dollar, I mean, I think it could be due for a bump higher, right? Okay. Dom, what's up? Makes sense considering market is stabilized and we will be kept working well enough, and then longer term numbers will just inflate. I said regarding the yen. Yeah, and like I said, I think longer term we've got to think. I'm gonna take you a ways back, guys. Dollar yen. I think we got to think this. Go back to like here. This is going to be very similar. If I had to imagine. Let me see if I can get a good view on this. that actually, I think this is going to be right. Okay. See this right here, this move right here. Imagine we're right here. Okay. You guys with me thus far? Wait. That's wrong time frame. I'm going to forget that for a second. This will be better. Let me do it on a chart that's not drawn all over. It's going to be easier, right? Here we go. Okay, much better. It's not as much data, but that's fine. It's okay. Oops. Okay. You guys see me? Do you see that? That's what I think is we're you know, we could go higher in the dollar yen and then come back down towards support. Now, whether that happens or not would be more, you know, what happens with stocks. I do have to admit that stocks are at elevated levels here. So, you know, that there's that, you know, it is a risk. But I think what we're doing is we're consolidating for something that's going to look like this through, you know, let's call it into beginning of 2022. And, you know, hell, maybe that happens. You know, maybe we face another, you know, multi-year correction in equities or, you know, something like that possible. But what I'm saying is we're going to have what we're going to see in the yen pairs probably going into the next 6 to 12 months will be something like that. Like, you know, we'll correct, you know, and we'll correct at some point, and then we're going to just grind it out higher. You know, it's a carry trade. It's what a carry trade is. You're probably going to see me a lot of times trying to pick up dollar yen, or not just dollar yen, but like, you know, euro yen, Aussie yen. You'll just see me try to pick them up on bigger pullbacks to sit in them for a couple of weeks is what I'm thinking. That's kind of like how I view things right now. Not necessarily today, but I'm just saying that, you know, over time, over the course of the next few months, that's probably how I'm going to be approaching the market. Especially, let's hope that, you know, we get some sort of correction here over the next, let's just call it 4 to 6 weeks. And then we get into end of November, December, and we know that a Santa Claus rally is coming. I'm just going to buy a bunch of yen pairs and just sit in them for the month of December. It's probably what I'm going to be doing theoretically. That's like in my head. Timing it is obviously everything. That's why we're all here together every day. But in my head, I'll be looking to buy every yen pair for the month of December, you know, at some point, whether it's ends up being November 15th or December 2nd, or, you know, it depends on what's happening at the time. You know, everything else. So anyway, just giving you guys kind of like a plotting of that. All right. That's pretty much it for me today. Watch equities, because I have to say the dollars, you know, you look at the Aussie right now, right? And I'm just going to go back to this real quick. You know, Aussie's turning down from, you know, I think this is key resistance. This I'm looking at a 15-minute chart. Let's go to a 4-hour chart. So I think this is pretty key resistance up here. Kiwis, you know, kind of struggling still. You know, sterling turned lower, big 618 rejection. Euro, you know, struggling here. So the dollar looks not so bad, all things considered. So with stocks where they're at, and you know, maybe Nick makes a good point. He says, you know, dollar seems to lead these big moves a day earlier as of late. Maybe that's the case. And if it happens tomorrow, You know who I'm going to tip my hat to? Nick. All right. Dollar, Gavin, one last thing. He says, dollar index 1 and 4 hour looks like be forming a channel to me. Yeah, I mean, sure. Like this, something like that, possible. You know what this is too? It's already taking place, but this is dark cloud cover on a 4 hour. Should lead us a little lower. I'm not saying we're going to new lows, but this should lead us a little lower in this 4 hour candle. We still have, oh shoot, we only have 13 minutes left in that candle. Yeah. So anyway, guys, gals, thank you so much for your support as always. And thank you all so much for being here. I'll talk to you in the chat rooms or a little bit later. Bye-bye.